Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having an incredible day. And without further ado, let's jump right into it. In very popular news, but of course it's similar to something else that we've heard before, Franklin Templeton, a US-based financial institution managing $1.5 trillion in assets, is preparing to step further into the world of cryptocurrencies, as they have recently announced they are going to be filing a spot Bitcoin ETF application that will go through the United States Securities and Exchange Commission. Yeah, we have another company who's now on board, who is seemingly trying to do the same exact thing that multiple other companies are doing. And it appears that, once again, the gigantic force behind all of this seemingly is BlackRock. We are currently, at the time of me making this video, roughly around 3.5, 4 weeks away from the final answer from the US SEC. For those of you who missed that video, I think it was the beginning of September, somewhere around there, maybe September 3rd or 4th, it doesn't matter, where the SEC had to give the yay or the nay to the 7 companies who had all filed at the exact same time as BlackRock, whether they would allow them to have a Bitcoin ETF. The US SEC was allowed to extend the time frame, basically saying that they needed more time to think it over. And apparently, the final answer should arrive on the, I believe it's the 16th and 17th of October. Therefore, 3.5, 4 weeks, give or take, somewhere around there. And it's causing a bit of a frenzy in the financial world, as you might have seen. Even if you have paid attention to the wider view of what's happening in the cryptocurrency market, as far as prices dropping and things like that, there seems to, rather from what I've been reading and what we've seen before in the cryptocurrency market, it looks like some kind of a concerted effort to make sure that you shake the tree as much as possible to get as many people out. The idea is that if BlackRock and the other ones do get the go-ahead, the idea is that from JP Morgan Chase and a number of other higher institutions, that they think that the SEC may allow all of the Bitcoin ETFs through at the exact same time to give a more leveled playing field, if you will. And the idea is that if they do get approved, Bitcoin's price will spike. So it looks like right now what we're seeing is actual accumulation from institutions on over-the-counter desks to not actually move the price, so that they can get in at a much lower price if there is some kind of an inevitable allowance of a Bitcoin ETF. We heard from another institution, they think there's a 75% chance this year and a 95% chance next year. We also heard from the former corrupt head of the US SEC, Jay Clayton, who said that he now sees no reason to actually reject a Bitcoin ETF, and he thinks that one will go through sometime this year as well. So as you can imagine, all the excitement is currently floating around within our market. The move is part of a series of spot ETF applications submitted by Franklin Templeton, another major traditional financial group with various activities within the cryptocurrency space, seeking permission from the SEC to list the investment vehicle on the market. The financial instrument is quite similar, it's the exact same thing, to the wave of spot ETFs previously launched and submitted for approval by BlackRock. Coinbase once again is in the spotlight for all of this and will be serving as the custodian to Franklin Templeton, most likely being part of a spot market data sharing agreement. For those of you who also missed that, in very weird news that is clearly coordinated, they know something we don't know. We're not allowed to be in these conversations or these board meetings. I believe nearly every company has chosen Coinbase as their custodian. The idea is, for those of you who were not here years ago, the SEC claimed that they have a very big problem with the structure of a lot of these Bitcoin ETFs because they were all happening within one company. So if you were Gemini, like the Winklevoss, I almost said Gemini twins again, the Winklevoss twins. They wanted a Bitcoin ETF, but everything would flow through them and Gemini. So the SEC said, you can't do that. You kind of have to have some type of, the word's not insurance, but make sure that everything isn't flowing through you. And therefore, you have to have a custodian for the funds. You have to have another market maker to make sure that money is flowing through all these different things. So that simply if Gemini should fail, the money is not all in one place. Historically, we've seen that they've chosen other banks or tried other institutions, but for some reason, every single company has chosen Coinbase, which is a little weird, I might say, as there are other institutions that could probably have done the exact same job. So I wonder what led to this kind of you rub my crypto, I rub yours kind of thing. With this development, Franklin Templeton has joined the list of companies requesting a spot Bitcoin ETF. Apparently, BlackRock and now 10 other major Wall Street players have previously made similar requests. And then they go on to talk about exactly how big Franklin Templeton is and how much money they have and yada, 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 yada. So cool. Of course, you can't get around it. Very popular news. Here's a tweet from someone else talking about that they figured out that they filed with the SEC. I guess secretly. It didn't seem to be as public as all the other ones where they actually had like gigantic announcements and stuff like that. And here's the actual filing with the SEC right here. I mean, you can see it, but you don't really need to see it. It simply just has like names and times and dates and who is who from the company and who does what, etc., etc. So in another bout of, sure, why not? I refuse to get my hopes up. I mean, 4 weeks isn't that long. I wholeheartedly expect the SEC to reject it, because they've been doing the exact same thing for the last decade. Understand that. The last 120 months, they've done the exact same thing over and over and over. So I'm not expecting anything spectacular. If we do get multiple approvals, well, then get ready because the market's going to go insane. If not, we continue to trek along and the market will continue moving up as we get closer to the actual halving. But a lot of companies are pretty adamant that BlackRock is going to get something. Who knows what's going to happen? I mean, I can probably guess it because the SEC is. Anyway, that's the Franklin Templeton news. And yeah, let's move on. Tying loosely into it because as we get closer, this is what everyone is talking about. Grayscale's Bitcoin investment vehicle, known as the GBTC, the Grayscale Bitcoin Trust, shares have increased in price against the price of Bitcoin, now trading just 17% below the Bitcoin price. The discount between Bitcoin and the Grayscale Bitcoin Trust has dropped to its lowest levels since 2021. This is a really weird one. Back in the olden days, when Grayscale was kind of the go-to place for institutions to get their Bitcoin, the idea being they, for some reason, a lot of them did not want to hold in custody physical Bitcoin. See, the idea was that you would go through a company, Grayscale, who was actually buying up the physical Bitcoin. Grayscale then issued shares in their company, in the actual trust that they were holding the Bitcoin in. And this is why we heard recently that Grayscale was trying to get their trust converted to an ETF, because it is literally the exact same thing, except it does not have the approval from the US SEC to have the letters ETF at the end of it. So the issue is that when Grayscale had their Bitcoin trust for about 2 years or so, once again, they were kind of the de facto place that everyone was going to get their shares of this trust to have indirect exposure to Bitcoin, which is what I've mentioned many times before. The idea should be just hold the actual Bitcoin. It's really not that difficult, especially if you're trying to get exposure to this market that you expect will explode or 100x in price at some point. The issue is that as a bunch of regulatory approval, or rather disapproval, and all this other stuff started coming up from the US SEC, and the SEC had problems with this, and the SEC had problems with that, and the SEC had problems with that, And they once again rejected Grayscale's submission to convert their trust into an ETF, and then Grayscale took the SEC to court. As you might have imagined, a lot of people began to get a little wonky on the entire thing. And the actual price of Grayscale's trust, which should have matched Bitcoin's price, but it did not because it was the actual, trust number, began to fall. And eventually there was a more than 50% discount in price comparative to Bitcoin, meaning if you were an institution and you wanted to get some air quotes cheap Bitcoin, but in the form of a piece of paper that came from Grayscale, you could rush to their trust, put in several $1 million, and you would have gotten a 50% discount on the Bitcoin that you purchased. However, the problem is no one knew if this would continue to fall, simply because it had already begun falling because of the other companies who began to launch their own trusts as well, the rejection from the SEC, the scrutiny from the SEC, and then the lawsuit against the SEC. So now that 50% discount has begun to slightly disappear, and now the price is only 17% different from where Bitcoin's actual price is. The idea is that if there is an approval or a swap, or they do get an ETF, that the price would then kind of, level off. This is one of the gigantic dangers of actually not, and I say this in the most logical form, one of the dangers of not actually holding the Bitcoin is that a lot of companies have been getting into the idea of a Bitcoin trust or something else, or even the idea of Bitcoin futures, and they quickly realize that it is not Bitcoin. So if Bitcoin's price is 30,000 and the futures market is showing Bitcoin's price is 21,000, that is to say the futures market over the course of a couple of weeks went down from 30 to 21 because their prediction models were completely off. These people have essentially lost $9,000 worth of value of Bitcoin. Same exact thing for a Bitcoin trust. Instead of these institutions finding a custody solution like Coinbase and simply saying we're going to buy X amount of Bitcoin over the counter, because the entire idea of a lot of this fund and this trust is that people were simply actually holding their Bitcoin. They were using Grayscale as lightly as a custodian of sorts. So it is a trust where you were able to actually trade in the idea of an ETF. It's an exchange traded fund, usually with the word stock in front of it. Stock exchange traded fund. It is a fund that you can trade on the stock exchange. People would trade it similar to an actual stock. And this is what the SEC probably has a huge amount of problems with, because it would allow essentially millions of people to be able to enter the market of Bitcoin, which is something that they don't want. The more people who are trading, the higher the price goes, the more that the more accumulation of Bitcoin. I'm certain the SEC is up to something completely shady, because all of this seems completely weird. Anyway, bringing it on back, the news being is that as the valuation of the trust is now only 17% below, a lot of people are ascertaining that this could mean that there's now renewed trust in Grayscale's Bitcoin trust being transitioned into an ETF, and or there being a spot Bitcoin ETF being reproposed, and therefore institutions are buying pieces of Grayscale's trust in the idea that if BlackRock does get approved, Bitcoin's price goes up, the Grayscale trust goes up, and therefore there's money to be made. I think I made that relatively clear. Grayscale currently holds $17 billion worth of Bitcoin. This follows a recent win by Grayscale against the US SEC, and the ruling, yada, yada, yada. We know what happened. The win saw the Grayscale Bitcoin trust rise, reducing the gap of the underlying price. Then it just talks about the actual discount, 50%. December 2022, them trying to get their trust converted to an ETF, but the SEC continues to say no. So it is lightly optimistic. The idea being that institutions, like we normally get news of whales buying behind the scenes. We normally don't get the indicator that the discount is lowering because institutions have begun to throw money back into Grayscale, which is an indication that there are, once again, hundreds of millions of billions of dollars flowing into the cryptocurrency market, not directly as they're going through the trust, but as the trust continues to increase, Grayscale also buys more Bitcoin as well. Yeah, Pretty good news, maybe not the most exciting, but these things have to happen behind the scenes before we can actually move along as an entire market. Yeah. Grayscale's trust, what do you call this thing? Not difference in price, whatever. Discount. The discount in price is now only 17% compared to 50%. And yeah, let's move on. Also in lightly confusing news, and I know that people desperately wanted to make this news more dramatic than it actually is, because I was like, okay, Ethereum transaction fees have slipped towards 2022 lows. Data from Coin Metrics has shown, amidst a drop in on-chain activity from NFT sales, meme coin trading, and Telegram bots. The idea is that the transaction fees for Ethereum have lowered because there's less network activity. I've seen a number of articles like this for a couple of other coins. Usually they're very, I don't want to use the term clickbaity, but that's kind of what they are. The idea is they say, hey, there's less network activity on Cardano. Should the network be terrified? Hey, not as many people are using XRP or Bitcoin or Ethereum as they were during the 2021 bull run. Should we all be terrified? And the answer is no. This happens logically. If there's less happening with prices, there's going to be less network activity. Less network activity means that there's going to be a lower transaction fee. Lower transaction fees means it's usually easier to use the network and move money around before there's a period of hype. And as we have seen prices fall across the board in nearly every single asset class, of course, there's going to be less activity everywhere. I was gonna, whatever. Anyway, I've gotten into other hobbies recently, collecting things. And I got into it because I saw people online talking about how much that prices had fallen. And this is usually the time when you want to get in, when the other people aren't really paying attention. But alas, the average transaction fee for Ethereum is just $1.83. Okay. While the cost of token exchange on Uniswap is around $4, give or take, because of Etherscan. Levels not seen since November of last year in the wake of the collapse of FTX. I thought this, for some reason in my mind, the FTX collapse was like 2.5 years ago. It's been in the news so many times and is so prominent. It literally feels like it was like at the end of 2021 or something like that. It's only been a year. That's terrible. As the demand for gas on Ethereum goes down, Ethereum allegedly has turned inflationary in one of the such periods since the merge in September of 2022. That also feels like it's only been a year since the merge. It feels like it's been years. Oh my gosh, time is like going fast but going slow at the exact same time. The news is, for those of you who missed the sentence, is that Ethereum is now inflationary. And I'm going to tell you why I think people wanted this to be bigger news than it actually was. The idea, for those of you who don't know or were not here, is that Ethereum, like many other coins, created new coins. And they did this with the gigantic machines that you saw under the premise or the idea of the proof of work chain. You needed tens of thousands of machines to be able to do this. They transitioned to something called proof of stake, where basically you can create or mine your own coins on your own computer at any given time. You can do this by yourself if you have 32 Ether. And or if you only have 1 Ether, you can join a mining pool, staking pool, and kind of do it yourself. With increased network activity for many of the chains, the same exact thing happens on XRP. Apparently, it also happens on Cardano as well now. And also many other proof-of-stake chains is that as the transactions are happening, there are coins being burnt in the background. The same exact thing happens for Ether. As Ethereum is the most used blockchain that we have on the planet, the more Ethereum transactions, the more coins that get burned. The more coins that get burned, the more deflationary the coin actually becomes. And in essence, in practice, the price should also rise as well. We're not seeing any price rises because the entire market's down at the exact same time. So as the demand for Ethereum has gone down, there are less coins being burned. Less coins being burned means that there are now, there's a line. So we've slightly gone over that line, and it shows that Ethereum is now inflating as opposed to deflating as it was before. But I'll show you the actual chart and why these numbers are very confusing. And once again, why a lot of people wanted this to be bigger news, but it actually is not. In the past week, Ethereum supply has increased by 4,000 Ether, worth roughly around $6 million. This is per the group called Ultrasound Money. I think they talk about a little bit more over here, the meme coin hype, yada, yada, yada. So basically, yeah, here's a chart right here. And it's not so much that Ethereum is inflationary as much as it kind of has flatlined. So it's more or less roughly not really creating more and not really decreasing around the exact same time. If you want like a bigger chart, here's the actual thing right here. So the inflation rate, you know how the US dollar had a 9% inflation rate? And what's the other one? We heard from Cardano, I think their current inflation rate is 3.25 or something like that. Every coin has a relatively weird inflation rate. Ethereum's current inflation rate at the time of me making this video is 0.16. So it is technically above zero, therefore it is inflationary. If we get any extra market network activity, it will become deflationary again. People wanted this to be big news because part of the idea of the value of Ethereum has to do with the fact that while the network will continue to make more coins over and over and over, there will be at some point more being burned than there are created, and therefore the coin would rise in value as there's less of it and more people lock it up. You get the idea. You know what Ethereum is. So I think a lot of these articles were made by people who either don't like Ethereum or simply wanted to try and put out something negative, that this coin that has been deflationary for 2 years now has a 0.16% inflation rate. See, I told you, like it's always this kind of news. If you really dig a little bit deeper, when you look at the news that's being put out there, you're like, oh, okay, it's not really that big of a deal. So cool. The coin is now inflationary. That's the way that the system works. But once prices move up again, this will turn deflationary and this will no longer be a topic of discussion. That's the Ethereum is now inflationary news. And yeah, let's move on. In very obvious, very obvious news, Coinbase has reportedly increased the interest rate of the USDC, the Coinbase coin, to 5%, marking a notable improvement from the 4% rate introduced earlier in the year. If you watch my other channel, it's called Money Rules. I have a video, I can't remember the name of it. Oh, that's going to annoy me. It was something along the lines of like safer investments to have. The idea is I get that everyone doesn't like crypto. So I made a video where I basically talked about like other things that people could put their investments into to get some money back as opposed to doing absolutely nothing with their money. And one of the safest ways was actually with Apple's saving account, like Apple, like the phone. Apple's rapidly trying to become a bank, for those of you who don't know, and they've begun offering a good 4% interest rate. What the idea is that they're trying to outpace normal banks who may only have a 1% or a 2% interest rate over the course of a year, so that all of your money stays within the actual Coinbase, within the actual Apple ecosystem. It's relatively genius. You buy all your stuff tapping your Apple Watch or your phone, or you buy everything through, just typing in your password and it goes through Apple. You sign up with everything using Apple, and now you keep your money with Apple as well. A lot of stable coins also offer relatively okay interest rates. The idea is they want you to use them more than their competitors. You would be more inclined to even hold, I mentioned this before years ago, to even hold stable coins as opposed to the US dollar, simply because you have an actual like guarantee of getting 5 or 6% back on your money. But that's neither here nor there. Coinbase recently has made a gigantic push to try and make sure that they are sitting on the throne, sitting near the throne, at the foot of the throne, when it comes to the idea and future of stable coins, central bank digital currencies, and also recently, for those of you who missed it, Coinbase has announced something called a flat coin. You don't have to worry about it. It's absolutely nonsensical. We'll see if it actually ends up even becoming a thing, where they're trying to find a brand new way of making stable coins. And they say that flat coins are kind of the way, and I can't roll my eyes enough about it. Upon the news that Binance is no longer going to be actively supporting Coinbase's coin and many other stable coins, Coinbase did the exact same thing in reverse, and they're trying to now find a way to make their Circle coin, the USDC coin, more attractive to people within the cryptocurrency space. The problem is that people use it, but not as much as Binance's US dollar, not as much as Tether. And also, there's another thing that they also don't use it as much as. I can't remember exactly what it is right now. But Coinbase, this is why I said very obvious, in a desperate attempt to get more users, it's not that they're increasing their interest rate from 4% to 5% because they want to make sure that you can buy that extra Starbucks latte at the end of the year. They're trying to do it to make sure that their coin is actually more competitive. That's how business works. You have to raise up your interest rate because if you have it really low, no one's going to use it. I told you all of that before for those of you who are not here. Coinbase had a thing a couple of years ago where they believed that they were sitting at the very top of the pyramid. And they allowed, I believe it was staking. It was some kind of thing that Coinbase was offering. However, the fee for it, you know how so for those of you who have had stocks or who have had a broker before, who maybe have invested in mutual funds or anything like that, you see that there's a fee for actually using that service. So if you go on Vanguard and you have an ETF or a mutual fund, they will show that it is run by a manager. There's someone managing the fund. And you'll see that it actively says the fund rate for this is 0.15% or 0.75%. The fee for using this is 1.38%. That's the management fee for actually using it, depending on how great that thing might actually be. Of course, they have a higher rate for their fee. Cool. They're always going to be making you money. Coinbase was offering, I don't know if they still are, I don't use Coinbase, they were offering a bunch of things on their website. However, the fee, unlike 0.25, 0.75, or 1.38%, Coinbase's fee was 25%. That is 25%. That is 1/4 of the money that you would have made. And I was like, how is anyone using their platform? It just doesn't make a lot of sense. There were tons of other places within the cryptocurrency space that offered 3%, 5% of a fee, or you could even figure out how to do it yourself and pay a 0% fee. Coinbase is a very weird platform. But now that they've come to the idea and the reality that they aren't it anymore, they're not at the top of the food chain, especially with them trying to tell the SEC towards the beginning of this year, if you don't do what we say, we're going to leave the U.S. And I was like, no, they're not. I'm pretty sure they're not leaving the U.S. And the SEC showed them their hand, but they put down the thumb, they put down the pinky, they put down the ring finger, and they put down their pointer towards Coinbase. And that's, where we currently are. Coinbase is trying to figure out a way to get more people to use the USDC. Not that it's a terrible coin per se, it's just more that there are other better coins out there. So in order to get people to use your coin more, you up the interest rate to make sure that it's higher than even Apple's, which a lot of people are going to start to begin to use. The San Francisco-based crypto exchange hiked their interest rate offer to holders of the USDC coin to 5%. Only months after affecting another increase that doubled the stablecoin's annual percentage yield, they had the interest rate at 2%. They saw that wasn't working, so they rose it to 4%. Apple and a number of other stablecoins can match that, so they rose it to 5%. Here's a tweet for it right here from someone has the name just Whale. That is absolutely incredible on Twitter. It says rewards for holding such coins are regulatorily compliant. The increments have all come following the US SEC's confirmation that stablecoins, such as the Circle coin, are not regarded as unregistered security offerings. So I assume they'll be trying to boost this up more. I would realistically say 5.5 or 6% would be a very good way to get people to immediately go to your coin and start using Coinbase or their Coinbase account as a form of a bank account. Because Coinbase, I believe, also offers a Visa card. I'm pretty sure I'm correct in saying that. And therefore, you would find a lot of people who would likely choose to use Coinbase over their normal bank account to say that I'm getting 6% return if they had 6%. A 6% return on my money and all the extra money I can use using this Visa card from Coinbase. But I think they'll get there eventually. Coinbase has had a very rude awakening where they believed for a very long time that they were at the top, and it's really not them. Anyway, yeah, that's the Coinbase 5% news. 5.5 or 6% is kind of like that's the sweet spot. That's the, Anyway, I do sincerely hope that you have all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.